Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some data. I'm a big data guy, like data viz. We'll take a look at the ETF stuff, sprinkle in some legacy. We'll talk about Bitcoin TA. It's been kind of quiet across the board since the ETFs have launched price-wise. Definitely have to keep that in mind with position leverage, sizing, just taking trades at all, right? Most of the time throughout history, you'll notice doing nothing is the best trade, whether that's holding or in cash, right? It's completely up to you. I think we're reaching a point here where we will have actionability. I don't think we're quite there yet, but we're getting there. In regards to the total number of BTC held in the ETFs, we continue to hold more and more in the ETFs, including GBTC. This will continue to rise slightly. There was a ruling for Genesis that they are potentially selling 1.4 billion in GBTC. Potentially that's going to be bought into BTC on Gemini's side. It's not finalized and nothing is settled yet, but it's something to pay attention to, obviously. But so far, so good from the ETF front. The new ETFs continue to absorb more and more, and this is what we want to see. It's no secret that GBTC has been just completely toxic for the market. It felt good on the way up. It's not going to feel so good on the way down. We're just lucky we have other products to absorb those flows. From a USD perspective, we've had 6 days of positive net flows here. Once those GBTC sales are final or have the ability to be finalized and sold, we're going to start seeing potentially GBTC outflows pick up a little bit again. Definitely something to watch for throughout the month of February at this point. Probably not this week, but the week after. And the more positive flows we get, the higher the likelihood, percentage-wise, probability-wise, that price continues to increase. The ETFs alone are not the entire market, but they do make up a large part of the market. Ideally, this is slow, sticky money. This isn't money that is, trading around a few $1,000s here and there in price. They're here for the cycle. They're here for the model portfolio, whatever it is, right? They're here for different reasons than you and I or most people watching this video, most likely. Waterfall chart is pretty fun. As you can see, again, we've had positive inflows. BlackRock and Fidelity averaging about 4,000 BTC a day each. So eventually this is going to catch up with us on the price side. We've certainly seen what it felt like on the way down when we have someone sitting on price in that regard. And it's going to be interesting when we see the opposite, likely post-halving. As far as the percentage, the percentage of toxicity in the market, right? Because let's be honest here, no one wants to willingly sit in GBTC thanks to the fees. And there's a lot of potentially unsavory forced selling to come here from, all sorts of avenues. Most of it's probably done, but the Genesis stuff clearly wasn't done. And the bigger slices of the pie that grow that are not GBTC, the better. Here was the story on the bankruptcy sale for their shares. It seems like everybody's got millions of shares of this GBTC stuff lying around. Here's the exact numbers of GBTC, of ETH, and ETCG, which is the Ethereum Classic Trust. So the ETH discount may grow, and we may see spot selling pressure on the Bitcoin side. And we're getting closer to having. So again, for most people, DCA and chill, stack sats, stay humble, do nothing, right? Most people, what you really don't want to do is screw up anything 75 weeks prior to having when, for the most part, we haven't seen the action, right? The action is 25, 50 weeks out from having. The action is not right now, okay? Now's the time to figure out why you're here, fundamentals, orange pilling people, okay? Now is not the time for 200x YOLO longs or shorts either way. So it's definitely better to be patient. I saw this tweet today. Jeebus, I think, said it the best. It's just chill, survive mode. This isn't, turtle down. Don't go crazy with it. You just want to be here, right? You want to be at the table in a year from April, right? Just make it to a year from April. And we're more likely than not to see higher prices than we're seeing today. In the near term, the near term is interesting because if you're the Fed and you're looking at inflation, you're looking at delayed data. Okay, this is real-time data. The real-time data says we are at our level and now lower based on year-over-year changes. The basket of truflation is similar. I don't think it's exact to CPI, but it's similar. Powell says he doesn't want, one data print. Okay, we're going to see how many months this goes sub 2%. Potentially this goes into deflationary territory on truflation, but we'll see. Now, if we look at rate probabilities, the market came in predicting 6 rate cuts. Powell has basically said, look, you're going to get 3 this year, depending on the election. He doesn't have a lot of wiggle room here on when those 3 cuts are going to be. And based on the data they're seeing, which is strong jobs, strong wages, inflation nearly there, but not quite based on their metrics, right? That's the data they're looking at. Whether or not you agree with any of that or not, whether or not you think it's fake or not, it doesn't matter. The data they're looking at and making those decisions tells them not to cut. Okay, fine. But if we're getting 3 cuts, you're probably going to see those cuts mid-year, most likely, right? So we'll see. There can always be a black swan in between to whether it's commercial real estate, whether it's some sort of China contagion that's appearing seemingly every day to hasten those cuts on this side of the pond. But so far so good with the data, right? And as he said, 3 rate cuts this year is what he expects. He was on 60 Minutes today, and even he admitted that over the long run, this fiscal path is unsustainable. I mean, that's obviously what most of the doomers have been pointing out. And that includes the Bitcoin people, not necessarily doomers, just pragmatists saying, look, this cannot last forever. Regardless of MMT or not, we can't just keep running up the bill without having to pay the consequences eventually. Whether it's you and me or the next generation or the generation after that, eventually this is going to be an issue. And look, this is why we Bitcoin. When my IRL friends bring this up, I say, yeah, this is why I Bitcoin right here. It's to opt out of this nonsense. And in the near term, the headwind we are facing from the higher for longer continuation here is a stronger DXY. Not only that, not only is DXY just higher on Fed jawboning, but there was also very much a bullish reversal pattern in the works here. So you've got the classic fundamental and technical lineup here suggesting that this probably goes higher. I'm in a Bitcoin long. I don't want this to go higher, but that's what it looks like it wants to do. It's kind of the battle of the inverted head and shoulders between DXY and Bitcoin. But in the long term, I think we're going to be okay. This is the rainbow chart, a slightly different version, having price regression than you've maybe seen of other rainbow charts. This is from BitBo. I'll put the links for this in the description of the video. But if we look at where we might end up post-halving, I'll take those odds. Again, we're sort of at the bottom of the range, and historically we have done quite well post-halving. So for anyone that's here, I think they're probably setting themselves up for that. This is probably my favorite chart of all time. It's the long-term power law, originated by H.C. Berger 1. And the crazy part here is the log scale of the x-axis. But again, this is, it says it all right there, where the highs and lows have typically been, and when and where we'll get there down the line. So by 2025, midpoint of 100, high point of 382, and a low point of 36K. One thing I want them to add on any chart going forward is having dates. I think that's, at this point, an absolute must. It's easy to just mentally say, like, it's here, it's there. But I think for everybody else who doesn't know when those dates are, really need those highlights on every chart. Looking at the nearer term price action for Bitcoin here, we're still in this pitchfork that we've been in for the past year. Pitchfork is just a trend channel, effectively. You can add wings to this, you can take wings off. How this generally works is when you reach a logical maximum relative to the midpoint, you tend to reverse and attempt a move towards the midpoint. I'm using specific language here because there's definitely no guarantees. Yes, am I bearish in the midterm? Yes, but we still have this opportunity on the near terms to pull up a little bit. Maybe that's just hopium on my part. Maybe I'm just talking my book, but I still think we have a chance of going slightly higher. One thing that might bring us lower is if legacy starts to roll over, if the DXY strength continues significantly. If we don't get a cut in the next 2 meetings, that would be pretty significant. So there are ways in which we could get there. Maybe the selling from Genesis is enough to topple us over a little bit. That is a roadmap potentially for bearishness. But on the other hand, again, we also have halving coming up. At some point, that tends to save us. Now, people will also bring to the table, look, every halving, we always have some sort of down move, whether it's slightly before or slightly after. This would line up with that. Also reasonable, right? So, how much more down are we going to get relative to halving? I know everybody wants to bottom tick a price, right? If I had to place my bets on a bottom tick here, it would be somewhere around 36.5 potentially. But the longer we hold in this range, the longer we stay flat and boring, the better relative to pre-halving. Weekly cloud also approves. We're still kind of trying to hold above the weekly cloud here. The cloud itself has not flipped. The TK lines have flattened out, just acknowledging a lack of momentum here. We're still pretty far away from both the TK lines. There's a yearly pivot at 34.5. So I think it's fair to lean bearish, whether or not that's a tradable setup. I don't think so. I don't think there's any imminent tradable bearish setups other than the potential daily cloud, but we're talking, a cycle top potentially between, let's call it 300 and 500K, right? Let's go wild with it. Do you really want to fiddle with plus or minus 3 to 6K down here? So in the end, it probably won't matter that much, and you definitely have to keep that in mind. Yes, I'd love to take a trade on the long side to 50 and then, catch a short from 50 to 36 or whatever. Like if that opportunity presents itself, great. But here, there's not much to do here. Now on the daily, we're starting to reach danger zone potentially relative to the daily cloud because we have a bearish TK cross from the 28K break. And we're starting to get within the next week, if we don't pull up above 43, we're starting to get a bearish edge-to-edge call on the cloud, which would be a move to around 38, which even in the grand scheme of things, again, who cares? It doesn't even matter, Let everybody come out and say, the ETFs are a failure, this is awful, let's even see outflows in the new ETFs, right? How crazy would that be? It doesn't really matter in the grand scheme of things. What do I want to be on the right side of this trade, whether it's a 43K break or a 42K breakdown? Absolutely. But in the cycle terms, not that big of a deal. Now, in the very nearest of term, as in probably mid-Monday, probably we're going to know whether or not this is going to work out. If not, by Friday, I'd assume. This has been setting up for a potential tradable pattern known as an inverted head and shoulders. It certainly helped the pattern that it's had declining volume throughout the formation of the pattern, which is always a good sign. It's been very sloppy and choppy, clearly 43.3 for whatever reason, right? I don't make up these levels. The market clearly knows that's the level, that's the resistance at the moment. If we are able to see a move above that, I definitely like an attempt towards 46. Typically your stop loss on these trades is anything below the right shoulder. So technically, because this has not broken out yet, you shouldn't be in this trade like me. You shouldn't be expecting higher highs. Because the GBTC selling has diminished substantially, I thought maybe, along with the pattern, we'd have a little bit of a chance here. Now the DXY strength is certainly complicating things, but we'll see what happens Monday. Ultimately though, you do not want to make lower lows here. Not only for the pattern, but again for the daily cloud. At that point, you're starting to drift into bearish likelihood territory. And the Wyckoff people are already telling you this is distribution. So we do not want lower lows if you're bullish. Another problem with this currently is this is a potential inverted Adam and Eve at this point, kind of a M double top. So there's all sorts of issues with this going higher, but this could still survive. I don't think there's any reason to let go of anything until that low has been breached. So far so good right now. It doesn't look super pretty, I'll admit. The 8-hour cloud would agree with that if we start to close below the 8-hour cloud and you're in a long trade. That's typically not a good sign. And once again, 43, 3, 44, whatever it is on the 8-hour cloud is basically telling you, yeah, that's the level, right? So it's definitely the right level on horizontals. It's just a matter of will we get there? Will we hold above that level? As far as alts, on the weekly cloud, there's different variations of how far are we through the weekly cloud. There's people sort of asking, will we stop at 140 on Sol? Is it better to trade DOT from 6 to 30 versus Sol from 140 to wherever it's going potentially, right? It might be. Depending on your time frame, it might be. Also depends on your confidence of this stuff moving. We've sort of had many variations of triple bottoms on all of these. Some of them yet to have a triple bottom, like DOT. So if you're purely trading the cloud, DOT, Aave, SNX, maybe slightly better setups than Sol, Link, AVEX, just as an example. And things that, I always love to put stuff on here that I wouldn't touch. Zcash, I think that's could be a new all-time low, I'm not sure. And EOS, I think, is close to all-time lows. Some of these will just never come back, right? And you definitely don't want to use the cloud thinking, oh, that's going to move through the cloud when there's no guarantee. So keep that in mind. Something else to watch for alts is TVL. TVL has gone up modestly since October, kind of flattened out over the past couple months. This isn't going to tell you when to buy and sell, but it's a good sign that there's juice in the ecosystem doing something, right? I talk about stablecoin prints. That's another great sign, but we really haven't kind of done much of anything over the past couple months there. Sol also has a low time frame potential for an inverted head and shoulders. It's pretty messy, right? It does have the descending volume profile, but again, you really don't want to make lower lows below 92. A close above 102 is probably good enough on the 8-hour for a move, basically to new local highs. But as we sit here again, nothing looks particularly enticing. Link did break out of its multi-month range, and somebody was right there to sell. Oh, that's right. It was the team. From the non-circulating wallet, they sold about 140 million in Link. So you always got to watch out for that. One of the reasons why on the way up, you get this selling pressure from unlocks from the team, selling from the team, insiders, VCs, whoever else. That isn't to say this can't go higher, but it's definitely not helping price to go higher. There's also many other coins in February. The Block did an article on this with unlocks to watch out for: Avalanche, Optimism, Aptos. You got a lot of people talking about the Jupiter airdrop. My rule with airdrops is you either sell them immediately or you hold them forever. And very rarely do you want to jump into that stuff, especially fresh off of the drop, because there are going to be a lot of people who are going to either be quickly underwater or wanting to sell that immediately. So you just have to be careful with the airdrop stuff. And what you really want to see is broad ecosystem activity, reasons that people would be using a DEX, people would be using the token. That's what you want to see. I don't know if we're quite there yet, even on Solana, which has pretty significant activity. For ETH, we also have a bearish DK cross. We also have the potential for drifting below the cloud here. If things get bearish, the potential for the head and shoulders, if we just sort of go sideways for another couple weeks, that's a pretty slam dunk case for a head and shoulders chart, and that would point to sub 1900. There's also a broader, pretty gross rising wedge that this could be potentially sitting within. So I certainly think the ETH side of the pond is less just default bullish than the other alts. I think mainly because of activity on that chain. Now there's a longer term pitchfork here for ETH, where ETH probably gets the last laugh, right? Even I know what happens after Bitcoin halving. Alts have done typically extremely well. So we're not there yet, right? Now, if ETH is out of the pitchfork post Bitcoin halving, then ETH might be in a little bit of trouble. We're not there yet. ETH also has, as everybody's going to remind you, ETH has an ETF coming up, guys. Everyone's going to buy the ETF that isn't staking, right? Now, I don't think an ETF catalyst is enough to pull ETH back to all-time highs. I think ETH has bigger problems with fees and retail wanting to use the chain, but the technicals are still okay, right? And, not to pick on Vance here, but these reasons for ETH doing well, I think, are kind of weak because we're not quite seeing that yet, right? These chains have their own token. Maybe not Farcaster or Lens. I don't even know what Lens is, but these L2 tokens are certainly competing with ETH, IMX, Ronin, right? Why would you buy, if you are a retail fast money trader, why would you care about ETH at all if you see IMX mooning, any of the other layer 2s, Arbitrum, Optimism mooning? So I think this thesis is interesting, but I think we will need to see it. We will need to see proof in the pudding first, because we just haven't seen that yet. Now we are seeing volume on Farcaster, which I think is like a Twitter clone. Haven't used it. I don't know exactly what the metrics are here, but yes, this chart is very impressive, right? A lot of people are talking about Farcaster. A lot of people have talked about many different ETH-related social networks, Bitcoin-related social networks that haven't really amounted to much, right? They exist. Maybe they're treading water. Maybe they're flavor of the week, flavor of the month, but they haven't been able to really sustain themselves. And, an example of that, of course, is Friendtech, which I don't know what exactly we're looking at here. If this is on-chain, it says sentiment. I don't know what that means, but, I know I can read a chart. I can tell you this isn't good. And I know a lot of people who were discussing Friendtech fervently, not doing so as much or anymore at all. And then we can go to Dune. We can look at Base. And depending on what you care about, again, look, what do you want to talk about? Total value bridged, that's kind of stagnated. If we want to talk about bridging flows, also flat, stagnated, right? Almost seeing more outflows there. Fees and revenue look okay. Nothing to write home about. New users look okay. Activity looks okay, right? Everything's kind of flat. Transactions slowly rising. So I still think it's going to take a bit of time for anything to happen. And then we can look, head to head under the hood. Active addresses of, this is from Artemis, Avalanche, BNB, ETH, Solana. Even if you just want to go head to head with ETH versus Solana on active addresses, ETH in the gray, Solana in the green. I mean, it's no contest, right? You can see why Solana has sort of taken over with the narrative just in active addresses. To compare transactions is not really fair because Solana has some weird voting, non-voting mechanism in there, but it's pretty clear what's going on. Most people are using, on a relative basis, they are using Solana over Ethereum. And we can add AVAX and BNB into the mix, and that just makes it worse for ETH because, once again, right, more people are preferring the other chains. The BNB active addresses and the gold don't exactly look, legitimate. So, you can think what you will about that, but it doesn't help ETH's case, right? That there's more competition that looks like it's getting pretty significant activity. Even just looking on the line graphs, right, you can see where that activity picked up in Solana, again in the green relative to ETH. You can see where the AVAX, price peaked off and then leveled off. So all this makes sense based on the on-chain data. Even if we look at DEX volumes, Solana giving ETH a run for their money, it just makes more sense to trade on a cheaper chain. Again, if you're retail, you care less about decentralization, you care more about fees, you care more about speed. And look, I'm no fan of either chain, but Solana clearly faster and cheaper in that regard. So either ETH needs some miraculous new tech, or it needs to see Solana explode a little bit. Something needs to go wrong with Solana in a big way as a competitor for ETH, I think, to do well. But ultimately, ETH's fees need to come down one way or the other. And I use the L2s, it's great, but you're not really using ETH. You're mainly using the L2 at that point. Lastly, real quick for Legacy, just absolute moonfest across the board on the indices. And this is another reason why I like the Bitcoin long over the short or over doing nothing in the moment. Now, if Legacy rolls over, we're going to 38. I don't know what to tell you. Bitcoin will go to 38,000 easily if Legacy rolls over. What might that look like for Legacy? Probably 4,600. I think it would be hard for the S&P to get lower than that in the near term. No bear div on the weekly. There was a bear div on the daily for the S&P. For the Qs, there is a bear div here on the weekly. Both of these patterns, could potentially go much, much higher. Things don't usually go there in a straight line, although this has since the breakout, and it's done so mainly because of tech. I mean, this chart is nothing short of phenomenal. Since August, up 400%, 450% from the lows, just absolutely incredible parabolic move from Meta, and the larger indices are certainly gaining benefits from that. So again, if this rolls over, which to me, I'm not going to short this, but I'm not going to long something that's at the top at the end of its parabolic move. I'd want to see this retrace a little bit, right? Maybe even back to 400. I don't think we'll see that in the near term, but I don't see many people just jumping at this trade right now. So that's all for this one. Watch for Bitcoin at 43.3, watch for DXY strength, and ultimately those are diametrically opposed to each other, so unlikely we see strength in both, and right now it looks like the dollar is going to be the winner. Like, dislike, comment, share, subscribe, and happy trading.